Reshaping the housing market, FHFA's new conforming loan limits. In a significant move that could reshape the housing landscape, the Federal Housing Finance Agency, or FHFA, has announced an increase in conforming loan limits for single-family homes. This decision is crucial as it directly affects how much homebuyers can borrow while still qualifying for loans backed by government-sponsored enterprises like Fannie Mae and Freddie Mac. By raising these limits, the FHFA aims to make homeownership more accessible, especially in high-cost areas where housing prices have surged in recent years. So what exactly are conforming loan limits? Simply put, these limits define the maximum loan amount that can be purchased or guaranteed by Fannie Mae and Freddie Mac. They are essential because they help determine the availability of affordable mortgage options for buyers. When these limits increase, it allows more individuals and families to secure financing for homes that might otherwise be out of reach. The potential impact of this decision on the housing market is significant. With higher loan limits, buyers may feel more empowered to enter the market, potentially driving up demand and prices. This could lead to a more competitive environment, making it crucial for prospective homeowners to stay informed about these changes and how they might affect their buying power. Conforming loan limits are the maximum loan amounts that can be financed through government-sponsored enterprises like Fannie Mae and Freddie Mac. These limits are crucial in the mortgage lending landscape as they help define what qualifies as a conforming loan, which typically offers lower interest rates and more favorable terms compared to non-conforming loans. The primary purpose of these limits is to ensure that borrowers can access affordable financing options while maintaining a level of risk that lenders are willing to accept. The Federal Housing Finance Agency, FHFA, determines these limits annually, taking into account various factors such as median home prices in different regions and overall economic conditions. By adjusting these limits, the FHFA aims to reflect the changing dynamics of the housing market, ensuring that home buyers can still find suitable financing in areas where property values are rising. For home buyers, conforming loan limits are essential because they directly influence how much they can borrow without facing higher interest rates associated with jumbo loans. For lenders, these limits help manage risk and maintain liquidity in the mortgage market. Ultimately, understanding conforming loan limits is vital for anyone looking to navigate the complexities of home financing effectively. In a notable update for the housing market, the Federal Housing Finance Agency, FHFA, has raised the conforming loan limit for single-family homes to $806,500 for 2025. This marks a significant increase from the previous limit of $726,200, reflecting the ongoing rise in home prices across many regions. This adjustment is particularly relevant for buyers in high-cost areas, where housing affordability has become a pressing concern. The rationale behind this increase is primarily tied to the escalating home prices that have outpaced wage growth in recent years. By raising the loan limits, the FHFA aims to provide more opportunities for homebuyers to secure financing that aligns with current market conditions. This move is expected to enhance access to homeownership, especially for first-time buyers and those looking to purchase in competitive markets. The new loan limit will take effect at the beginning of 2025, allowing lenders and borrowers to prepare for the changes. This timeline is crucial as it gives potential home buyers the opportunity to strategize their financing options and adjust their home search accordingly. Overall, this increase in conforming loan limits is a significant step toward addressing the challenges faced by home buyers in today's dynamic housing market. The increase in conforming loan limits to $806,500 in 2025 is set to have a profound impact on home buyers, significantly enhancing their purchasing power. With higher loan limits, buyers will be able to secure larger mortgages without stepping into the realm of jumbo loans, which often come with stricter requirements and higher interest rates. This expanded financial capacity means that more homes will be within reach for many prospective buyers, allowing them to consider properties that were previously out of their budget. For first-time home buyers, this change is particularly beneficial. Many first-time buyers struggle with affordability, and the increased loan limits can provide them with the opportunity to enter the market more easily. With access to larger loans, they can explore a wider range of neighborhoods and property types, making homeownership a more attainable goal. Additionally, buyers in high-cost areas will feel the effects of this adjustment most acutely. In regions where home prices have skyrocketed, the new limits will enable buyers to compete more effectively in a challenging market. This could lead to a more balanced playing field, reducing the pressure on buyers who have been forced to settle for smaller or less desirable homes. Overall, the increased loan limits are poised to create a more favorable environment for homebuyers in 2025. The increase in conforming loan limits to $806,500 is likely to have significant implications for the broader housing market. One of the most immediate effects could be an upward pressure on home prices. As buyers gain increased purchasing power, demand for homes may rise, particularly in desirable neighborhoods. This heightened competition could lead sellers to raise their asking prices, further driving up the overall cost of housing. In terms of housing inventory, the increased loan limits may encourage more homeowners to list their properties for sale. With the potential for higher sale prices, current homeowners might feel incentivized to capitalize on the market conditions. However, this influx of listings could also lead to a more competitive environment as buyers rush to secure homes before prices escalate further. Additionally, the impact on mortgage rates and lending practices cannot be overlooked. As more buyers enter the market seeking larger loans, lenders may adjust their offerings to accommodate this demand. While conforming loans typically offer lower interest rates, an increase in demand could lead to slight fluctuations in rates. Overall, the loan limit increase is poised to create a ripple effect throughout the housing market, influencing prices, inventory, and lending dynamics in the coming years. The recent decision by the FHFA to raise conforming loan limits to $806,500 has elicited a range of responses from real estate and mortgage industry experts. Many leaders in the field view this increase as a positive step toward enhancing homeownership opportunities. For instance, a prominent real estate analyst noted, "This adjustment reflects the realities of today's housing market and provides much-needed relief for buyers in high-cost areas." Such sentiments underscore the belief that higher loan limits will empower more individuals to enter the market. However, not all reactions are entirely optimistic. Some experts express concerns about the potential for escalating home prices as demand increases. A well-known mortgage broker cautioned, "While the increase in loan limits is beneficial, we must be wary of the unintended consequences, such as further inflating home prices and making affordability an ongoing challenge." This perspective highlights the delicate balance between accessibility and market stability. Looking ahead, predictions for the housing market following this change vary. Some experts anticipate a surge in home sales as buyers take advantage of the new limits, while others warn of a potential slowdown if prices rise too quickly. Overall, the consensus is that the increased loan limits will significantly influence the housing landscape, but the long-term effects remain to be seen. In summary, the FHFA's decision to raise conforming loan limits to $806,500 marks a pivotal moment in the housing market, offering increased purchasing power for homebuyers and potentially reshaping the landscape of homeownership. This change is particularly significant for first-time buyers and those in high-cost areas, as it opens up new opportunities for securing financing in a competitive market. However, as we've discussed, this increase may also lead to rising home prices and heightened demand, making it essential for buyers to stay informed about these developments. Staying updated on housing market changes is crucial for anyone looking to navigate the complexities of home buying or selling. Understanding how these shifts can affect your options will empower you to make informed decisions in this dynamic environment. If you found this video insightful, we encourage you to subscribe to our channel for more updates and expert analysis on the housing market. Don't forget to like this video and share it with friends or family who might benefit from this information. Your engagement helps us continue to provide valuable content and keeps you informed about the latest trends and changes in real estate. Thank you for watching, and we look forward to seeing you in our next video.